Let's take a look at the stock. Sound, what is happening here? I will definitely show you the volatility smile, and also look at the support levels. I will show you the 3D volatility as well as the market forecast for this company. Let's start from the very beginning. The stock, after an incredible 520% increase, corrected by 65%. This happened at the end of April, and after that, the stock rose another 70%. This is actually very significant growth. I remind you that the stock is related to music, so what is happening now? What is our growth potential? Let's look at the volatility, because the derivatives market, the options market, will help us understand this stock and its forecast at different levels. First of all, the volatility is at a high level, around 100%. Volatility at closer strikes is lower, but in any case, it is high. Let's also look at the volatility smile. As we can see, the volatility for closer strikes is directed both towards decrease and increase. This means that investors are laying out a potential for both a decline and a rise in the stock price in the short term. However, for longer expiration dates, we see that volatility is flat, neither increasing nor decreasing. Now let's look at the historical and implied volatility. Currently, historical volatility is the gray line and implied volatility is the white line. As we can see, historical volatility is much higher than its current levels. This means that the stock can return to its historical levels. I always tell you that you can trade not only the stock itself, but also the volatility, because no one can know where the stock will go. It can start to rise or fall. It's very complicated, but trading volatility is simpler because we have a reference point historical volatility. Let me show you an example of what can be done here. Again, this will be based solely on the options market because volatility can only be traded using options. Let's take, for example, mid-July. Let's say that volatility will increase by 20%, and let's see what the artificial intelligence suggests in terms of strategies. It suggests buying one put option with a $5 strike for July and selling one put option with a $5.50 5 for October. I must say right away, this is a complex strategy because it involves both buying and selling options with different strikes and different expiration dates. It's really a very complex strategy, but the more complex it is, the more interesting it becomes. We can look at the profitability profile. It looks like this. I am just demonstrating what can be done. I am not just saying that you can trade volatility. I am showing how exactly it can be done, specifically through options and specifically through this strategy. However, I do not recommend opening such a strategy because you can lose money. It is very risky. Generally, I do not recommend listening to artificial intelligence bots, bloggers, because you could lose everything. You need to take a reasonable approach to forming your portfolio. Now, let's look at the support and resistance levels. As we can see, there is a very high concentration of options at the $5 and $7 levels. The stock closed exactly at $5. Some might say this is magic, but I say no, it is just derivatives and market makers who adjust the stock to the desired values. We also have a wall around $7, and as we see, the stock is currently in consolidation. There is also a support level at $5 according to the put options. As we see, the stock tried to break through $5 but has not managed to do so yet. This is a very significant level. Again, I can show you and remind you how market makers work. When someone buys options, especially call options, the market maker sells call options. To avoid unlimited loss, the market maker must hedge this sale by buying the underlying stock, following a delta-neutral strategy. This means buying stock according to the delta. The higher the delta, the more stock the market maker has to buy, and the higher the stock price, the higher the delta, creating a feedback loop. If at some point the stock breaks through $5 and then $7, it can start to rise rapidly because market makers will have to buy more stock, pushing the price higher. Therefore, we have significant resistance levels, and this cannot be ignored. These levels form a huge wall of resistance which can be broken through with large volumes. If the stock starts to rise significantly, for example, on some news with increased volumes, we can overcome these levels and grow further. Now, let's return to the stock and its growth potential. Currently, the stock is unprofitable, but naturally, it is in its early phase, essentially a startup. If you believe in it and in artificial intelligence, then this is a high-risk, high-reward investment. The stock clearly has a long way to go. I remind you that I cannot predict price movements. My main task and goal are to skillfully form a strategy and portfolio. I build strategies to profit regardless of the stock's direction. This is my main objective. Now let's look at the 3D volatility. It concentrates all the information about call options, put options, derivatives, expiration dates, and strikes. Professionals often use this chart to skillfully form positions. Now let's look at the market forecast, for example, for mid-July. Here we open the options chain. All calculations are based on probability theory. As we can see, there is a high probability that the stock will be between $4.50 $5.50 5. This is actually a positive market forecast because there is a 15% probability that the stock will be between $5 and $5.50 5. So, in fact, the market expects the stock to rise within a month. This is a positive signal, but again, this is what the market indicates. I am not claiming the stock will rise. This is not an investment strategy or a signal. I am just stating what the market shows. However, if we look at a more distant date, for example, October 2024, the market predicts that the stock will be between $4 and $4.50, a decline. But again, if we look at all stocks, The market generally forecasts a decrease by the end of the year for almost any stock, which aligns with this prediction. It's likely that by the end of the year we might enter a recession. Again, this is a forecast based on derivatives, the stock market, and the options market, so the stock in question might also decline. However, if you are a long-term investor and believe in the significant growth potential of the company, it doesn't matter if you buy at $5 or $4, if you believe the price will eventually reach $30 or $50. If this company is a promising one, and if artificial intelligence continues to develop, there is a high probability of substantial growth. But this is a long-term perspective, and you should not expect this to happen in the coming months. This is an investment for years, and if you are ready to wait, it could be very rewarding. Additionally, I want to remind you that I have started a new experiment. I am opening an entirely new portfolio from scratch, investing money earned from YouTube. All the money will go towards building this new portfolio, and I will transparently show which stocks I am buying and what actions I am taking. You can watch the first video of this series where I explain the principles on which my portfolio will be built. So subscribe to keep following this experiment. I am confident that we will outperform all indices. Good luck to everyone.